Hello everyone, welcome to a journey through innovation, excellence, and transformation. Hello, my name is Ganga, and today me and my team are proudly presenting Infosys in front of you. Infosys, a global leader in consulting technology, next generation services, it has been reimagining business for decades. Established in 1981, Infosys is an NYSE listed global IT service company with over 336K employees in it. From a capital of 250 US dollars, it has become a company of 18.38 billion US dollars with a market capitalization of $67 billion. With a client centric approach, Infosys has been a trusted partner to various enterprises across the world. It has been providing various solutions to the challenges faced in the journey. In the journey of 40 years, it has catalyzed some of the major changes in India, which have led to the growth of India in IT services and also has invaded the talent of India in the software side. So let's enlighten one of the milestones of Infosys. It has ranked top 3 among the IT service brands in the world by Brand Finance itself, which is itself a valuation firm in its Global 500 2023 report.
So, what is merger and acquisitions? Product and logistic companies often get merged in order to get longer, in order to get bigger, sometimes by other companies. So, here the term acquisition and merger comes. The whole process of acquisition requires a lot of advisors to estimate the value of the company which is being bought. Now, one of the important question is how much the company is worth. For that, company is often compared with the others, that how much it can give valuation to the company which through which it is procured. Now, one of the important question is how much the company is worth. Company buy other company to generate cost savings and additional income. It is important that company to predict the future benefits given by the company which is acquired. In different years, different companies were being acquired by Infosys, like Wongdoody, a creative agency with $50 million, Fluido, a sales consulting company with $25 million, ODD, a, a beauty and wellness company, was acquired in 2022 as per the latest records by Infosys Private Limited. Now here I would state the reasons why the acquisitions were done by the Infosys. In order to get globally recognized, the acquisition is done, and also it increases the market value of the company, and also the global diversification will be there for that company. Now, my final words for Infosys. This company has emerged as tech giant in last 20 years, covering up several sectors of industry with valuation of around 6 lakh crores, that is approximate to $73.1 million dollars, with expansion in up to 46 countries. Overall, taking over the leading companies in the world. So, it is for sure that Infosys market capital is going to increase in future, and it will have a great impact over Indian market as well.
Hello everyone, myself Ines and today I am going to talk about dividends. First of all, I would like to give a short intro about dividend. So, dividend is the distribution of a company's earning to its shareholders and is determined by the company's board of directors. Dividends are often distributed quarterly and may be paid out as a cash or in the form of reinvestment as additional stock. The dividend yield is the dividend per share and is expressed as dividend price as a percentage of company's share price such as 2.5%. Common shareholders of dividend paying companies are eligible to receive a distribution as long as they own the stock before the ex-dividend rate. A company can issue dividend in either cash or stock. Typically, they are paid out at a specific period. Usually, it is quarterly or annually. Essentially, these are a share of the company profits that are being paid to the owner of a stock. Dividends payment are affected the equity of a company. The distributable equity, retained earning, and or paid in capital is reduced. Now we are going to see about the type of dividend. So basically there are two types. First one is cash dividend and second one is stock dividend. So a cash dividend is a straightforward. Each shareholder is paid a certain amount of money for each share. If an investor owns 100 shares and the cash dividend is $0.50 per share, the owner will paid a sum of $50. Now we are going to see stock dividend. So in stock dividend, it also comes from distributable equity but in the form of stock instead of cash. If the stock dividend is 10%, for example, the shareholder will receive one additional share for every 10 owned. Now we will see about some terminologies which is generally used in any company. First, first of all, we will see about earning per share. So, in earning per share, if the company has a million shares outstanding, the stock dividend would increase its outstanding shares to a total of 1.1 million. Notably, the increase in shares dilute the earnings per share, so the stock price would decrease. Now we will see what is growth stock in a company. However, when a growth stock starts to issue dividends, many investors conclude that a company that was rapidly growing is settling down for a stable but unspectacular growth of rate. Now we will see what is the summary of Infosys in dividend. So for the year ending March 2023, Infosys has a declared an equity dividend of 680% amounting to rupees 34 per share. At the current share of pricing, rupees 1419.35, this results in a dividend yield of 2.4%. The company has a good dividend track report and has consistently declared dividends for last 5 years, which you can see in the table.
Hello everyone. Let us know about the Infosys tender offers and buybacks. In the dynamic world of finance and corporate strategy, it has two such mechanisms that plays a critical role in this area are buybacks and tender offers. These financial strategies are employed by the company to repurchase their own shares from the market and signalizing their confidence in the business and influencing the shareholder values and alternating the ownership with landscape. Tender offer. Tender offer is nothing but an offer to purchase some or all of the shareholders' shares in a corporation. Example of tender offer. For example, a company A as current stock is price of $10 per share. An investor seeking to gain to control of the corporation submitting a tender offer of 12 per share with this condition that they acquire to at least 51% of shares. In the corporation finance, a tender offer is often called as takeover bind as the investor seeks to take over the control of the corporation. Advantages and disadvantages of tender offer. Advantages of tender offer. Tender offer provides several advantages to investors. For example, the investor are not obligated to buy a shares until set of number in the tendered, which eligibilities large upfront cash outlays and prevents investors to form liquidating stock positions and in its offer fails. Acquirers can also indicate escape classes and releasing liberty for buying shares. For example, if the government rejected proposed acquisition citizen of the validations, the acquiring can refuse to buy refunded shares. Disadvantages of tender offer. Although tender offer provides many benefits, there are some noted disadvantages. A tender offer is an expensive way to complete post-trade takeover as an investor and pay SEC filing fees and all those costs and other fees of specialized services. And it pays to benefit investors also if other investors become involved as a post-list takeover and the other prices increases and because there are no guidance and the investor may lose the money on the deal. Tender offer of Infosys. The company conducted its first share buyback of 13,000 crores in December 2017 through the tender offer route. The buyback price was kept at 1,150 per share. The cash-rich company announced 8,260 crores share buyback in 2019 through the open market route at the buyback price is 747.38 a piece. What is buyback? Buyback of shares or stock buyback refers to the corporate action where a company repurchases its own shares from existing shareholders. During the buybacking shares or the purchase of the shares is usually higher than the market price. Buyback of shares can done either through the open market or tender offers route. Under the open market mechanism, the company can buy back their shares from the secondary market. On the other hand, during buybacking of shares via through the tender market or shareholders can submit their tenders in their shares within a stipulated time. Avail the opportunity to earn premium with buyback of shares. Buybacks by Infosys in the past. Tender offer buyback in 2017. The buyback price is 1,150 and the size of share is 130 million and the size of shares is 113 millions. In the year 2019, the open market buyback is not exceeding at 800 but the size is 83 million and the size of shares is 103 millions. In the open market buyback in 2021, buyback price is not exceeding but price is 1750 and the size is 92 million and the size of a share is 56 million. Who benefits from stock buyback? Companies benefits from the stock buyback because it can preserve the stock prices and consolidate the ownership and it takes place of dividends. Investors can benefit because they receive their capital back and however a repurchase does not always benefit to investors. Share repurchase means when a company buybacks its own shares from the market. Methods of share buyback. There are four methods. Buybacking from open market, fixed price tender offer, Dutch action tender offer, repurchase by direct negotiation. Advantages are flexibility, tax benefit, and share buyback as a signal. And disadvantages are unrealistic pictures through the ratios and judgment errors in valuation.
Hello guys, as we know that investors in the stock market are often presented with opportunities to enhance their investment holdings through various mechanisms such as bonus shares and right issues. These financial instruments are employed by companies to raise capital, reward existing shareholders, and promote growth. In this introduction, we will explore two such mechanisms employed by Infosys. What is bonus shares? Bonus shares are additional shares given to the current shareholders without any additional cost based upon the number of shares that a shareholder owns. In order to understand the bonus shares, let us consider an example. If investor A holds 200 shares of a company and a company declares 4:1 bonus, that is for every one share he gets 4 shares for free. That is total 800 shares for free and his total holding will increase to 1000 shares. So this is called bonus shares. How Infosys share its bonus shares? Most crucially, Infosys has always awarded bonus shares in 1:1 ratio, meaning one bonus share for every shareholder held on the bonus share record date. According to data on the BSE website, Infosys has awarded bonus shares 8 times during the past 20 years. Infosys is issued the bonus share to its shareholders and issued a bonus 8 times since 1994. And the last date of bonus record was in the 2018. So you can see here that a shareholder having 100 shares at the time of IPO in the year of 1993 and the shares have become to 1,02,400 shares due to the bonus given by the Infosys company. And these are the details of the prices and the shares and the bonus ratios given by the Infosys company during these years. And 2018 is the last year which they have given the bonus ratio, and till now they haven't gave any issued issues to the shareholders. So this is the detailed bonus history of Infosys company, that announcement dates, bonus ratios, record dates, and ex bonus dates. So by this we can see that announcement dates are the dates which the company will release the news of they are releasing the bonus shares, and record dates are the dates which like the record date is the cutoff date decided by the company to be eligible for bonus shares. All shareholders who have shares in their demat account on the record date will be eligible to receive bonus shares from the company. That means you have to buy the shares from the Infosys company, or you have to manage some shares in your demat account before this date, or else you are not eligible for that bonus given by the company. When will the bonus shares be credited? Once a shareholder is identified as a being qualified for a bonus share issue, the bonus shares are given a new ISIN. It takes no more than 15 days for the bonus shares to be credited to the particular shareholder's demat account when a fresh ISIN is assigned to that shares. Now coming to the right issues. A right issues is an invitation to existing shareholders to purchase additional new shares in the company. This type of issues gives existing shareholders securities called rights. With the rights, the shareholder can purchase new shares at a discount to the market price on a standard future date. So let's take an example for this. Let's suppose an investor already owns 100 shares of company XYZ and the shares are currently trading at 200 rupees each. In order to raise more money, company XYZ announces a right issues for current investors at a price of 150 rupees a share, which will last for only 30 days. And before that, we have to buy that shares with a given amount of time. So coming to the right issues of the Infosys, Infosys has not announced any rights so far. So what's the difference between right issues versus bonus issues? Right issue is a right issue to its existing shareholders to subscribe to the shares at a discounted price within a specified time period. A bonus issue is an issue of shares by the company to its existing shareholders free of cost. So we can conclude that right issues of shares benefits existing shareholders, offering them the advantage of applying for shares at a discounted price and retaining their voting rights. A company can raise a reasonable amount of capital through the rights issue of shares.
So in conclusion, I would like to state that the Infosys Limited quote is equal to 1420.10 Indian rupee as on 27th of August 2023. Based on the forecast, a long-term increase is expected. According to INFY, the stock price prognosis of 21 August 28 is 2382.96 Indian rupee, which is after 5 years of investment, your $100 would be equal to $167.75 in 2028. So plus 67.75% increase has been expected till date.